Welcome back to The Frontier. I'm James Rockwood. I'm here with Ingrid Macintosh, who's the VP of Wealth, Head of Enablement, Digital Strategy, Marketing at TD Asset Management. Ingrid, thanks for joining us on The Frontier.
My pleasure.
So today, we're here to talk about women in wealth. I'd love to chat a little bit about your background, kind of how you got started, and then how you made it into TDAM, into the role you're in today.
Absolutely. So I have been around a long time. Been in the industry for over 35 years. I actually started as a trader back in 1987, and there was not a lot of women on trading desks back then. I think we were sort of allowed to be in the room at that time. Spent about 10 years as an equity and fixed income trader before moving to the asset management side. Ironically, after I had a child, I came back from a very short mat leave because, again, didn't understand mat leaves in capital markets back then. And one of my clients hired me to work with pension funds and work on the asset management side. Worked at a few firms. I came to TD Asset Management 20 years ago to build out the active fixed income business. So I've worked in relationship management. I led product. I've worked with advisors. And I have the role that I have today. So I've really had a great view of how the industry has changed for women, but also how the industry serves women. And I think that's a great conversation. I'm so glad you've got me here today.
Yeah, I'm really excited to have you on. It's fascinating kind of topic. And I think, given we're here to talk about women in wealth, what are some of the key differences and considerations when it comes to women in wealth management and how the wealth and asset management industry serve them?
I think we'll take it from two sides. Let's take it first from women actually working in the wealth management business.
Sure.
And then we'll sort of talk about the dynamic of women and investing. And I think traditionally, and we've talked a little bit about this offline, it has been a male-dominated business, this business of advice of people working with clients to help them manage their financial futures, very male-dominated. And I think part of that, historically it was a transaction-based model. It was very sales-oriented, and it wasn't really geared to the life and professional journey of women. And it also really was a boys' club. I think the industry has really evolved, and the advice business really is about advice now. Mm-hmm. It's much more holistic in its approach, and it's much more well-suited to both male and female representation in the business. And I'd say also, which we're going to talk a little bit more about, is where the share of wallet is really moving to the hands of women. So our industry needs to do better, and we need to reflect the customer base that we're serving. And that means really finding ways to grow roles and opportunities for women in wealth management.
So before we go into the investor side of things, I'd love to chat a bit about that stat we chatted about offline around wealth transferring to women.
Yeah.
Can you talk a little bit more about that?
Yeah, I mean, certainly when I talk about wealth for women, it's a conversation about the critical importance of women finding their voice and about the industry and serving them. But it's just really good business too. Mm-hmm. The share of wallet is moving to the hands of women. So if we think about it, over the next 5 years, wealth transfer through what we call both vertical and horizontal transfer. So think vertical, inheriting from our baby boomer parents, or horizontal, that wealth transfer that results from divorce or widowhood, for example. That is predominantly landing, almost 70% of financial assets will land in the hands of women. Mm. And when we think about the business opportunity around women in wealth, it marks a money in motion moment, right? It's not like getting a client early on and growing their wealth with them. It actually creates a critical moment that if the advisor or the industry, the organization gets it right, can be an incredible opportunity to take share. The reason I'm so passionate about this is, to date, I don't believe the financial services industry has been getting it right for women.
And so on that first part, because I'd love to get to that point, so 70% of the assets will transfer to women. And I think it's interesting because when you hear about the great wealth transfer, all the focus is on boomers passing it on to millennials.
Boomers who've made huge wealth through great markets and great real estate.
Yeah, passing their wealth on
big lump,
to millennials, and how crazy it's going to be and everything needs to be online. Less so about it transferring horizontally to women before that happens. Why do you think that coverage isn't the same, or that narrative hasn't been quite as prominent?
I think because people I think it's becoming more prominent, right? Mm-hmm. Because everyone is trying to find that path to share and to growing their client book. Even before you get to the wealth transfer, let's look at women generally as a segment. So besides disproportionately inheriting wealth, women are now out-learning men. So we are earning undergraduate, graduate, and doctorate degrees at a higher rate than men. We are up-earning, which means we haven't quite closed the earnings gap, but it is getting close. It's getting closer and closer. And we're outliving men. So typically in a heterosexual couple, there's a 90% probability that the wife will outlive the male partner. So when you think about why is the wealth transfer disproportionate that way, it's kind of a demographics thing. Men tend to be older in the relationship. They marry younger women, and they die sooner. So when I speak to women, I'm such a huge advocate because for many women, maybe of my generation or sort of just under my mom's generation, the money conversation wasn't part of that conversation. So they're ultimately ill-equipped when that wealth transfer happens. And I want to make sure that women are well-equipped to manage that relationship. Similarly, the financial services industry hasn't been really leaning into it, or where they have been dealing with a traditional heterosexual couple. Very often the advisor is hugely focused on the male in that relationship, in that conversation, in getting ascension to, an offer, a question, or a recommendation. So women, again, are doubling down on feeling left out of that conversation. So there's a whole lot that I'm hoping we get to unpack in here, because I think some of the stats are surprising and some of the risk to the industry is surprising.
Yeah, that's really neat. So you're saying that primarily the conversation's happening with the males, that men are making the majority of the financial decisions in typical heterosexual couples, or why is it that the attention's being paid to men?
So again, remember I said that the traditional advice business years ago, think about the broker, it was a transactions-based business, right? You had to actually transact because you earned a commission. It wasn't the fee-based model that we have today. And when talking about money with a couple, for example, and I'm going to use generalities and sort of history and what the data shows, is that men make decisions very quickly. And once they've made a decision, they tend not to go back. Women, we tend to be more holistic thinkers. We want to think about it. I always joke about, try to do a home renovation with your husband. You'll say, which tile do you like? He's like, the white one. I'm like, the white one? Oh my God, like which white one? And I'll spin on it and I'll keep going back. And he's like, haven't we made this decision? It's kind of the same way. But now imagine that you are the female partner in that conversation. Let's say you're working with your advisor for 20 years and you go in for your, twice a year sort of conversation. He makes some recommendations. The male says, yeah. Now in that moment, women, we don't like to rock the boat. So if we don't have knowledge and confidence, we don't say anything in that moment because we assume somebody knows better. And may or may not be true, but we sort of do that because we don't want to be seen as not knowledgeable. We don't want to rock the boat. Now imagine you have that conversation, over 20 years, 40 visits to your advisor, where 2/3 of the time or 3/4 of the time the advisor is making eye contact with you, not with me. I'm feeling increasingly disassociated from the conversation. And this is one of the, when I go out and I speak to groups of advisors, when they say, how are you doing with your women advisors? I say, we're doing great. And I said, did you know that, somewhere between 70 and 80% of them will fire you when their husbands die because they felt so disconnected, right? So when we have conversations with advisors in the industry, we're really trying to drive home this imperative of understanding the way that women think about money, the way they want to be communicated with money, that they want to be engaged in the conversation and brought along. Because if they're not, when that moment comes, when that money in motion moment comes, they're going to put their money in motion and they're going to go somewhere else and they're going to find that advisor that fits for them, that understands their needs, the way they think about it, that takes the time. And I'm not saying that this is all on the advisor. I'm equally advocating to women to take more control of the conversation. We talk about the 3 myths that women sort of lay out. They'll say, I don't have enough time to learn about it. And often, when you think about building your wealth, it's at a time where you're new in your career, maybe you're new in your family. We will, as mothers, we will delegate pretty much everything else that doesn't have to do with our kids. So we step out of that. So the not enough time. The not enough money. I don't have enough money to be worthy of a conversation with an advisor. So they kind of defer or abdicate. And then the third sort of myth is, I don't have enough money to be worthy of having a conversation with an advisor, which is simply not true. So there's all these hurdles that get in the way of women getting on their knowledge journey and their confidence journey. And the longer that they avoid that conversation, I think the more it compounds and they feel further away from it and they should know more and they don't. So they just don't engage. why that keeps me awake at night is two most powerful things you can do for your financial future, the tools in your toolbox, are time and diversification. Well, diversification's free and so is time.
Mm-hmm.
But if we don't get women thinking about money and confident and they're not engaging in their journey, they're sacrificing one of the most powerful compounding tools.
So let's talk about why it's different for women.
Yeah.
A lot of the products are the same. They're going to buy mutual funds. They're going to need insurance. They're going to need a will and estate plan. How is it different for women when it comes to women in wealth? And what are the different considerations that advisors should have to understand how women think about money and how it differs from men or families?
Sure. So you're right. The instruments are the same. And we've talked a little bit about women not leaning into the conversation. So leaning maybe into women and helping to bring them along and making sure that you're dealing with them in a specific way. Women are a powerful engine for an advisor's practice. In fact, women will refer a good advisor 2.5 more times. So if they feel connected to their advisor, they're going to tell way more of their friends to go to that advisor than typically a male will. When it actually comes down to investing specifically in those decisions, there's a few sort of thesis or myths. The first one is that women are risk averse. Fundamentally not true. Women are risk aware, so they want to understand the risks and they want to understand the sort of the interplay and the trade-offs. But once they are informed, they are equally happy to take risk. TD Wealth did a body of work called the Wealth Personality, and there's a number of factors that lay into anybody's wealth personality. And we looked at the differences between men and women and money against some of these wealth personality traits. And one is this idea of conscientiousness, right? Like, how do you react in moments of stress when you have information, et cetera? And what we found is that women ranked higher on conscientiousness, meaning that with information in periods of volatility, women are actually less likely to make that mistake of kind of pulling back or pulling their money out when they're informed. So back to the first point being not risk averse, but being risk aware. So make sure they understand and they're better at staying the course. Secondly, I'd say women are twice as likely to say they want to invest their money aligned with their values. That doesn't mean, oh, you can only sell ESG-based strategies to women, but it does mean that while rate of return is important, doing good is also very, very important. So the conversation should include how the type of strategy that they're investing in aligns with their goals and their beliefs. So a couple of nuances there. One of the things that really concerned me when I was starting this work, and we're in a different place now that we've sort of seen this correction in interest rates, but from 2008 to earlier this year, post-financial crisis and the move of the central banks, we had this horrific penalty on savers, right? So anything that was low risk was low return.
Yeah.
So women, if they were risk averse, if they weren't informed, they were staying at a lower risk profile, which was fundamentally undermining their long-term success because they weren't taking enough risk. So again, that's one of the worries I often had with women. Great story. And, pretty much anywhere I go, somebody gives me a soapbox. I get on, I start talking about this. We had my husband's best friend and his wife were over for dinner, and we were talking about something I'd done. And husband's best friend was relaying the story of his mother. His father died early in his late 50s, immediately after having retired. And so his mom had, his investments, and she invested in only GICs. I said, why is that? And the belief was, well, my husband worked really hard to leave me this nest egg. It's not for me to take any risk.
Wow.
So that was a blind spot for me that, women have some of these other thoughts around money as well. And so I think that's why it's really important for advisors to dig in a little bit with women and make sure that they have the understanding, the knowledge, the confidence to be making the right decisions.
So they have different preferences to a degree around sort of values. I think it's interesting now, like values is generally showing to become really important in investing across the board, especially in the last kind of year. You've seen that that's really the fervor around ESG.
The planet's on fire, so yeah.
Yeah, there's just a lot of, that's something that's kind of come in to the foreground a lot more than necessarily it would have historically. From a risk perspective, it sounds like, generally speaking, they would have the same risk appetites.
Yep.
Slightly more information required, but would, at the end of the day, stay invested for longer. So you're kind of
get invested, stay invested, take enough risk. Yeah.
Bit of a cost to maybe, get them to invest with like adding in the information, but then they're also going to hold it there. So you're getting it back as an advisor.
Yeah.
What about some of the like life events, right? Are women more susceptible to some of these life events? You've got, there's having kids, there's divorce, there's a bunch of different elements. I'd love to hear a bit about that.
Yeah, there's a whole bunch in there. So let's think about women's career paths. So for women who choose to have children, well, here's where it gets a little depressing, right? So let's see how the numbers are stacked against women. Okay, first of all, we're earning 75 cents on the dollar check. Then we have children. We often take on the disproportionate amount of work on the home front, and we're out of the workforce for periods of time. There's a lot of great studies out there that show beyond the time out of the work cycle, there's a skills gap, but there's also some sort of other factor that keeps women from reaching the same level in their careers. So we have an earnings gap, we have earnings hurdles related to childcare, we take on more, we live longer. So lots already stacked against us. When we have children, I was talking about that, we tend to abdicate a lot of the decision making. Women who get divorced often don't fare as well financially in the divorce scenario, and again, may have to make other major changes in their life, whether changing their career path or their work frame. And 43% of marriages in Canada are going to end in divorce. And then there's the widowhood piece, right? We've talked a little bit. If I asked you what you think the average age of widowhood would be in Canada, what would be your guess?
I figured it'd be somewhere in the 70s to 80s.
Yeah, 56.
Yeah, that's crazy.
Yeah, right. And I think I have a thesis in there that, these older guys are marrying younger women and somehow they keep divorcing women. Anyway, but maybe that's why the women are young, but there is a dispersion there, and it's a surprising number. But again, in that moment, having to change their lives. And there are so many things that we prioritize over thinking about our money. And that's why I'm such a big advocate. It's like, no, women, make this a focus of what you're really thinking about. We've seen studies that say 80% of women can't find an advisor they connect with, right? Like there's this friction to getting women in the conversation, and we know it's going to benefit the industry. So how do we get the industry to do better to find women? And then how do we encourage women to take those steps to build their confidence, which then builds their engagement and their action and gets them on that journey?
Yeah, confidence is a really interesting word. So we've done a lot of research in our work around the best feeling you can have with an advisor. What are the best clients an advisor can have? And what are the happiest clients as well? And the one word that always comes up is confidence. People talk a lot about trust as the goal, but trust gets to confidence. You can trust somebody and still have to check in on them. You can trust a babysitter, but be looking at the night camera over your child's crib or whatnot. That's not confidence. Confidence is you go, you have your dinner or whatnot.
And the babysitter's got it.
And it's all fine. Right. And I think for wealth and asset management, particularly with the advisor relationship, that's the difference. Advisors will know the clients who trust them, and they'll know the clients who have confidence in them. And those people tend to be happier, but also tend to be require less input until they have some complex situation. So the sort of regular maintenance of the relationship can be a lot more straightforward. And so I think, how can advisors be prepared? One of the things I think is a good effect in the industry, or something that's happening a lot right now in the industry, is this shift towards more holistic wealth management. Because that's starting to tee up the conversation beyond just what portfolio are we going to work with today, or what stock will I trade, into tell me about your problems, tell me about where you're stressed out, your financial goals. But what can advisors do more specifically to be prepared for not just engaging women in the conversation, but these life events, and how can they hedge and be prepared for that?
I think you're bang on. I think you asked me at the outset, what makes men and women different when it comes to money. I think, and again, I will speak in generalities and sort of the data. I don't want to be completely saying that men are just this way, but men tend to have a bit of a competitive bias. So it's about the rate of return and the highest rate of return, and risk-adjusted return doesn't often even come into that scenario. Women more often want to know that they are okay, that their families are okay. So it is much more a holistic, goals-based conversation. I know for me, when I think about my number or what it is, I have a number in my mind that will say, I will be able to live the life that I want, make sure that I have a legacy for my kids, da 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 da. That's kind of a dollar value, and having that goals-based roadmap is really powerful in a couple of ways. One, it's it keeps your mind off the market volatility. Like you're not reacting to that, but it also informs women. Like building wealth isn't just about the securities or the funds that you select. It's about all the micro decisions you make along the way and how you save for that or sort of input into that, how you spend differently, et cetera. So having that goals-based conversation with women is critically important, but also understanding the life stages and the things that matter, right? Like if you have the right risk profile and you have a properly diversified portfolio, the real place that you're leaning in is when there is a life event. Something happened in the family, has something happened in your career, has there been something? That's where advisors really step in. I've talked to advisors who run divorce support groups, right? Introduce women, we're communal, right? One advisor had a client who had lost their husband, and she realized she had sort of this pattern, and she put together a seminar group so women could come out and talk about what they were thinking about. Talk about building trust in your advisor and understanding what was important to the woman. Incredible, right? Not just about we're going to put these alts in your portfolio because da 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 da. Just tell me I'm going to be okay.
Yeah, that makes a lot of sense. I think as a population, that am I going to be okay question, like where's my money? What is it doing? Am I going to be okay? Like those are really the top three questions.
And is it aligned? Is it invested aligned with my goals, my values?
Yeah.
But advisors don't believe that if you have a good relationship with a heterosexual couple that you're good. Right. The eye tracking technology says 70% of the time you're looking at the dude, right? Like, and you're compounding this disassociation with the woman in the relationship who actually really wants you to stop and say, I'm going to use less jargon. Let's just talk in this way, and don't patronize, but, make sure that there's space, creative space to have that conversation.
Yeah, that makes a lot of sense. I think that it's not enough just to have the holistic discussion, but also really trying to make a concerted effort as an advisor to engage with women in those relationships, because as you mentioned, 90% of them are going to inherit, 70% or 80% of them are going to change. How do you bring those numbers down?
How do you hedge your book? How do you hedge your practice, right? For this life, this money emotion moment that if you haven't gotten it right, is going to be motion away from your practice.
Yeah, and I think it's interesting too, like every time you had, and I think you made this point earlier, every time you have a major life event, that is an opportunity as an advisor to gain the client's confidence. Right. If you are aware of events that can happen, you're aware of, you have other clients who faced similar, like divorce could be an easy example. The financial impact of it, the considerations that need to be made. You've worked with somebody else recently who's done it. This is an opportunity to then step back up and really build a relationship there and present a plan to say, no, you're going to be okay. I know what to do here. And that's going to be somebody who's not going to leave you because you were there for them
in their moment of the need. Like, here's all the things you need to do right now. You need to call your bank. You need to do this. Like, here's your checklist of how we're going to help you get through the next. Do you have a credit line? Do you know that that's going to get locked up? Like all those things that somebody in a moment of crisis, whether it's divorce or widowhood, needs help with. That's true advice. That's like, I'm going to be your trusted partner to get you through this. And that builds incredible currency.
And so when you're thinking about, sorry to interrupt, when you're thinking about how the industry can help, we've talked about the difference in men and women. We've talked about how advisors can engage them. What can the industry do to ensure that women feel supported, to ensure that the advisors also know how to support them? They aren't necessarily going to they haven't gone through those life events themselves, or they're obviously advisors are confident financially, so they aren't going to understand necessarily or appreciate the hesitation around that. What can the industry do to prepare the advice and the system to actually better serve women?
There's the micro grassroots and there's the macro. So the micro grassroots is like, understand that building the knowledge and the confidence is critically important to get people on the journey. So whether it's thought leadership, whether it's consumable information, whether it's writing, talking, providing easily accessible information to help build that knowledge and confidence, incredibly important. I think at a macro level, transforming the industry so it looks much more like our population. I'd love to see more women in leadership roles and advice. And at TD, we now have more than half of our leadership team in advice is women. we need to have that representation at the top of the house. And we need to be organizations where women can see themselves in careers in financial services and financial advice. Because to your point, originally, that holistic nature of the business is really well suited to women. And I think we have to do a lot to help people understand what a career in this industry could look like. Because it really is so much more about the interpersonal relationship than the security selection, right? Mm-hmm. There's a lot of tools to do that, but nothing can take away that human connection.
Yeah, that makes sense too, because you can have people who can better prepare their advisors to have these discussions. For example, having like a divorce checklist, right? We've gone through this. You can enable your advisor workforce with tooling, with education around it, to be able to show up and provide it, because they want to be able to provide that service and build confidence with them. If they don't have the materials or they're not enabled to do that, it'd be very difficult to inherently or intuitively know how to react or what to say, or how to make somebody feel like they're in control.
It's a journey that we've been on, which is that years ago, it's that convincing advisors that women are in many ways different and represent a huge opportunity. And by the way, if you don't really lean into this, it's a risk to your practice. But then institutionalizing it in the business by driving the thought leadership, creating the awareness, creating the forums to bring women to the table. We've done some research on our stats on our social side, and we publish content. We publish market content. What did the big Bank of Canada do? But we also publish content around suddenly single, how to think about this, or the connection between financial health and mental health, things like that. And the engagement that we get on women-focused content is 6 to 10 times higher than on traditional market content, right? So women want to connect with financial services industry. They want to understand it, but maybe not in the same ways that are interesting to us. Yeah. What did the Bank of Canada say? And why are they doing this, right? Like, maybe they are. And people also think that there's, I've had people say to me, well, you don't really need to lean into the women conversation because women are every bit as smart as men. And we don't need to accommodate this. And it's like, it's not about smart, right? It's about different priorities. I have spoken a number of times to large groups of female doctors, right? Clearly brilliant in their area of expertise, but money isn't. And over, I heard again that the financial services industry they found was patronizing. Mm-hmm. And they felt spoken down to, and clearly they were accomplished. And people didn't maybe understand their financial journey, right? Like the financial wealth curve of a doctor maybe looks very different than a lawyer, for example. You're in school and building a practice. So I think, advisors who are segmenting their books, maybe keep always asking the question, what might be different about women? How might I serve women better? And that will really make your practice incredibly resilient.
And then also, I think, strive for confidence, right? Like confidence is one of those things that is intellect aside. You're building knowledge in your plan. You're giving the person the sense of control over their life. Wealth goals and life goals are very, very heavily correlated.
Of course they are, yeah.
And so being able to give somebody that confidence and just trying to gun for confidence with your client. So if you've got a family, you've got a man and a woman, you want to have confidence across the board. Yeah. And that can mean different things for different people. And if you're trying to get one outcome, you might know there's going to be slightly different effort that needs to be put into it, or slightly different information that needs to be shared with each party. But knowing that you're going to one single goal, how do I make this client confident, is going to build a much more resilient practice.
And I think that's exactly it. Like, knowledge builds confidence, confidence builds action, and the corollary, right? Lack of knowledge, lack of confidence leads to inaction. And while you're not acting, that time factor is moving along. Time doesn't stop. The power of compounding doesn't stop, but you're starting your journey later and you're sacrificing so much. So if advisors are truly committed to the financial well-being of women, they maybe have to pull them a little bit harder into the narrative and make sure that they're taking those moves, because sometimes we abdicate, sometimes we delay, sometimes we tell ourselves those myths of not enough money, not enough time, not enough knowledge, and we don't get on that journey. And I think advisors really play a part to create better financial outcomes for women.
I see this as being a three-part sort of action plan. You've got wealth managers enabling their advisors with information and with plans to react to common challenges that women face. Yeah. You've got the advisors themselves looking to engage with women to understand it's not just good for today, it builds a more resilient practice. Yeah. They're likely going to inherit the money. the great wealth transfer has a horizontal component to it as well, and you need to be considering of that. And then for women, it's about making sure that they break some of those myths and that they have an opportunity to try to engage, try to get educated, and make sure they're at the table feeling like they are in control and that they are going to be okay.
Yeah.
That's awesome.
It is. I think, we've talked about the structural barriers, and then there's those emotional barriers, and you've sort of talked about it. Like, let's change those structural barriers to women. But again, women, you need to stand tall, and you need to take those steps necessary to get yourselves on the journey too. It's a two-pronged approach.
That's amazing. That's really, really good. Well, thank you so much for joining us on the Frontier today. I really appreciate it. It's been a great conversation. I think this is a key area for where the industry is going.
Absolutely.
I think the industry is in an interesting position to continue to follow with the holistic plan and continue to follow with adding values into the investment decision-making process. And so I'd just like to say thank you so much. That's all from the Frontier.